Welcome to Chain Reaction by Capital Copilot, your daily dose of the latest in cryptocurrency news, market insights, and blockchain trends. Let's get started. Bitcoin rockets above $72,000 in one of the most explosive rallies of 2026, liquidating a record $3 billion in short positions within 24 hours. Treasury buybacks, the Clarity Act push, and massive institutional inflows converge to flip sentiment dramatically. Bitcoin is trading at approximately $71,900 after briefly touching $72,300, up 11% in 3 days. This surge liquidated $2.74 billion in short positions, with over $1 billion evaporating in a single hour. This marks the largest forced short closure in crypto history. Bitcoin shorts accounted for $1.42 billion, while Ethereum contributed $1.14 billion, as it surged 18% to $2,280. Treasury Secretary Scott Bessent announced the Treasury would double long bond buybacks from $2 billion to at least $4 billion per operation, running September 9th through November 4th. This pulled 30-year Treasury yields down from 5.34% to 5.19%, triggering rotation into risk assets. Bitcoin broke through technical resistance that had held for 6 weeks. President Trump amplified momentum during an August 19th White House crypto summit, calling on Congress to pass the Clarity Act. Trump met with executives from Coinbase, Ripple, Gemini, Kraken, Chainlink Labs, and leaders from the New York Stock Exchange, NASDAQ, and CME Group. Trump stated the U.S. is considering purchasing Bitcoin for a national reserve and revealed CFTC Chair Mike Selig is working to bring Hyperliquid into U.S. compliance. Hyperliquid's HYPE token rallied 20% to $70. SEC Chair Paul Atkins announced proposed crypto assets rules at the summit, creating the first formal framework allowing companies to raise up to $75 million annually without full securities registration. Institutional capital is returning aggressively. Bitcoin ETFs recorded over $1 billion in net inflows across 3 sessions, with BlackRock's IBIT fund leading with $588 million. Ethereum ETFs pulled in $289 million. Morgan Stanley quadrupled its Ethereum ETF position in Q2, adding over 200% despite a 14% price decline. Q2 institutional filings reveal critical divergence. While total Bitcoin ETF holdings rose 7.5%, ownership became more concentrated. Banks like JP Morgan expanded positions by 25%, while tactical traders including Citadel cut exposure by 60 to 70%. Sovereign wealth funds held steady through the drawdown, signaling sticky institutional demand. The Office of the Comptroller of the Currency will finalize stablecoin rules by November 2026 to meet the January 18, 2027 Genius Act deadline. The agency expects to begin processing stablecoin issuer applications in January. A procedural Senate vote on the Clarity Act is scheduled for September 15th. Senate Banking Committee Chairman Tim Scott expressed confidence the bill has a really good shot of advancing. That's a wrap for today's edition of Chain Reaction by Capital Copilot. We hope you're feeling more informed and ready to navigate the cryptoverse. Until next time, keep your digital wallets ready.